Good afternoon, folks. This is Lance Bryce with Thrive Mortgage. Today is the 3rd of March, Thursday. Hope you're doing well. Interest rates are a mixed bag. Been extremely volatile this week. Some of the most violent swings we've seen in a very long time. And with all that's going on in the world, that's understandable. I'll do my best to make a little sense of it in the 3 minutes of this call. Interest rates this time last week were at 4.17, according to the Mortgage News Daily. They're at 4.09 today. They were significantly lower earlier in the week, folks, and we saw a very strong rally in the bond market when we announced much stronger sanctions against Russia. If you remember in our call from last week, when those additional sanctions were not announced in the initial comments from the president on the Ukraine invasion, you saw the bond market sell off and you saw interest rates head higher. And we've now seen that reverse course with these much tougher banking sanctions on Russia. The Fed kind of undid that some this week. The commentary yesterday and today is taking us from an expectation of a 50 basis point hike to a quarter basis point hike. That actually has caused interest rates to head higher. That sounds counterintuitive, but it would have been much better for the bond market had the Fed stayed on course for a half-point move at their next meeting. And the reason for that is the bond market hates inflation. And we want to see a Federal Reserve that is working decisively to battle inflation, and the market did not get that from the Fed this week. And as a result, bonds are selling off over the last 2 days with yields moving higher as a result, those yields being our rates. The Dow is actually liking that news. That's one of the reasons the Dow's up 500 points over this time last week. Dow kind of likes a soft pedaling Fed. That may be good for equities. It's not good for interest rates or bonds in the face of the type of inflation that we are seeing. Tomorrow, non-farm payroll comes out. That's a monthly report that always moves the markets up or down. So keep that in mind as you make plans this week on whether to have you or your clients lock in a specific rate. I would not float going into a non-farm payroll report. We've got a strong locking bias at brycehomeloans.com. If you have any questions over any of this, hope this is helpful, feel free to reach out to me. We try to make it as convenient as possible. You should receive this video in your email. That email's got all of my contact information. A lot of folks just forward that to their clients needing to apply. If you'd like to talk to me about the market as well, give me a shout. We'll see if we can figure it out together. In any event, have a good week. We will talk to you soon. Stay safe. Pray for Ukraine and for our world in general, that this madness brings about some degree of peace in the not too distant future. Talk to you next week.